Hello and good afternoon. Hey, we have so much this week, so we are going to really dig into a lot of different data points, a lot of different market moving factors, including, of course, Fed Chair Powell moving the markets quite a bit here just the other day. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to bring to you the market news and data and trends we're watching, and hopefully weed out a bunch of the noise along the way. And this week is just packed. So before we get into it, I just want to share, I hope you had a great Thanksgiving weekend. Hopefully you're able to enjoy some good food and relax a bit with family. And if you're in the Pacific Northwest, I hope you're staying safe and warm because although it's not snowing here in Bellevue, I know it's still sticking in a lot of places. So hope you're enjoying it, but not causing too much pain. Anyways, we're going to jump right in because there's so much. So this week we have jobs, we've got the Fed, we've got inflation, we've got you name it. So first, let's start a little bit about going back to earlier this week. On Tuesday, consumer confidence numbers came out. They were about in line with expectations. So given everything else we have to cover here, I'm not going to spend too much time. But then on Wednesday is where things really started to to shape up the week. So Wednesday, we had ADP employment report numbers come out. And the ADP employment report, if you might remember, and for those who follow us weekly, you'll know that they stopped doing this until I think it was September or so. So they stopped doing this for a few months because it was not very accurate. They wanted to kind of revamp where they were getting their data and how this was reported. So this is, I believe, the third or fourth report since the revamped version. Anyways, the reason I'm sharing so much is that on Wednesday, ADP employment report showed only 127,000 jobs added. So this is the first big surprise, really, with this new ADP report. And obviously, it's not a good number. The expectation was much, much higher. So the question, of course, is this new ADP employment report still a good sign for signal for what's to come on Friday with non-farms payrolls? So right now, here we are on Thursday, everybody is watching the number tomorrow. So really pay attention to non-farm payrolls. I'm going to talk about the Fed here in a minute, which of course has an impact, but the non-farm payrolls number tomorrow is really important, and the market is really watching that very closely right now because of this bad signal on Wednesday and because of what I'm about to share with the Fed here in a minute. Before I touch on the Fed, I want to briefly touch on gross domestic income. This number came out on Wednesday as well, and gross domestic income was up 0.3%. The reason I wanted to share this is we've been talking about recessions for a while. We still feel it's likely we see one into 2023, but the conversation has always been around GDP and recession. I'm not, denying that we have issues, but I think that we're just not in one yet. I do think it is coming. And the reason for that is because the GDI, gross domestic income, is one of the top data points that the Bureau who tracks and determines whether or not we're in a recession actually follows. So again, this was up. Now, I think that will change as we look into 2023, but nonetheless, I did want to share that for some of the recession conversation that's out there. All right, the big thing though. So we also today had PCE come out, measure of inflation, up 0.3%, and spending actually still growing up about 0.5%. Of course, some of this has to do with the holiday season though as well. All right, but the big topic, right, is Fed Chair Powell. So Fed Chair Powell spoke this week and basically said that they were going to slow the pace of rate hikes, or sorry, the slowing of the pace of rate hikes is likely getting closer. And he mentioned that there's possibly even as close to December. If you follow the markets, you probably saw on Wednesday, the markets just went through the roof on this news, which I think is just incredible. I mean, I guess I'm a little perplexed because at the end of the day, the Fed has been sharing this time and time again. I think this is obviously a good signal that maybe rates are not going to continue to be hiked as quickly as they have, but this shouldn't really surprise anybody. This has been what the Fed has shared time and time and time again. In fact, even in that same press conference, Fed Chair Powell also shared that it's very likely they have to raise rates higher than they had thought in the last meeting. So although they're maybe slowing the rate of hikes, the rate hikes are still going, right? Just slowing doesn't mean they're stopped or rates are coming down. So it's been really interesting to watch this. The market loved it yesterday. Today on Thursday, markets were pretty flat. I think in anticipation for the jobs data tomorrow, because what the Fed keeps pointing out time and time again now is the jobs market. And if we start to see cracks there, then they may get less aggressive. But as long as that labor market continues to be strong, whether it's 75 or 50 basis points, which again, the Fed has projected, I think that they're going to kind of continue to have that, what they call a hawkish tone. In other words, they're going to be aggressive on their rate hikes. Now, again, some may say, well, because they're slowing, it's not as aggressive. I think they've voiced that time and time again. And at the end of the day, a 50 basis point hike is still big. It's still relevant. So, certainly something to get excited about, but maybe not as excited as we saw on Wednesday there. All right. What I thought was interesting is that the Fed also shared that they're going to be really looking across the yield curve. So short-term rates, long-term rates, you name it, and find places where rates are adequate. Again, in that same breath, basically, they also suggested that they may have to hike further than expected. So take all this with a grain of salt. But as we gear up for the next Fed meeting in December 12th, I think it is, obviously this is becoming really, really important. And I think Fed Chair Powell knows that every word is being hung on. So typically he's going to use these weeks leading up to it to really project what they plan to do. So probably will be no surprises, I imagine, coming up on the 12th. But, this, I guess, shouldn't have been a surprise really either. So we'll see what happens. Coming up next week, we have non-farm payrolls tomorrow again, right? So that's going to be a really, really important number to watch. We'll break that down next Thursday for you. And of course, with that, we will kind of share some preparation, some breakdown for the Fed meeting the following week, because it's already coming up just that quick. All right, with all that, what I wanted to share as we kind of switch gears is a question of the week, which is a great one. We actually just wrote a blog about this. It was Giving Tuesday just a couple days ago. So we're going to talk a little bit about charitable giving today. And what I want to share here is some, let's call it 5 different strategies that can really help if you're looking to give back this year. So there's a few that are really important. For those who are age 72 and above, or 70 and a half, if you started distributions a ways back, as you may know, you have to take money out of your retirement accounts, and it is fully taxable if it's a traditional IRA or 401k. If you are in that boat and you would like to give to charities, you should explore the idea of qualified charitable distributions, QCDs. So this is something that may allow you to just divert your distribution instead of to you, to a charity, and it never touches your income from a tax perspective. Okay, something really worth looking at. There are also charitable lead and charitable remainder trusts. So this is a way to maybe give money directly to a charity and receive a monthly income from that trust, or the other way around, maybe drive a monthly income to the charity of your choosing. But it can create a really big tax benefit in the year of those gifts. You can also explore gifting appreciated assets, right? If you've got a stock that has done very well, this year might be a little different story, but especially last year, this was really important. If you've got, stocks or, any position that has a big gain, giving those appreciated assets can really help from a tax perspective. Something else to consider is what's called donor advised funds. So this is the 4th piece here. Donor advised funds are a way to basically get all the tax benefits of a charitable contribution without actually determining the charity that you want to give to today. So you can set up a donor advised fund, put money towards this type of vehicle. It can still grow and be invested and be tax-free. The key is that once it's contributed to a donor advised fund, it must be used for charity, right? You can't take that money back out for yourself, okay? But it creates a lot of the same tax benefits as giving directly, and gives a lot of flexibility too if you're not exactly sure what causes are most important to you today, okay? And the last thing, the 5th one, is bunching gifts. So as you think about these different strategies, and if you start to really put them together, these can all really work strong as a whole. What bunching gifts means is instead of giving every year, let's say you give $5,000 a year, instead of doing that every year, instead, if you want to bunch those all together and give, actually, let me make a different point, $10,000 a year for 5 years, and you want to bunch those together and give $50,000 in 1 year, that can create a much larger tax benefit. Because now in 2022 and onward, we're back to the old tax code. Last year, you had a lot more flexibility on your giving abilities, how much you could write off, taking standard deduction and still getting charitable benefits. Now you either get standard deduction or itemized deductions. So if you bunch them, it may help you to take advantage of itemized deductions where otherwise you may not get that. All right. So I hope that's helpful, very timely, obviously, as we are all in the holiday spirit. But just let us know if you have any questions on your mind, especially as we gear up for the Fed. If you have any questions about the Fed next week, please let me know so I can cover it next week in our payrolls, our jobs breakdown, and our kind of Fed prep for the following week there. Thanks as always for joining us. We will see you next Thursday at 3 p.m. and stay warm and safe out in the snow.